between $40,000 and $80,000. That's what 5 specific mistakes are currently costing home sellers in New York region and South Simcoe. And most sellers do not realize they are making them until their home has been sitting on the market for 60 days and beyond. Today, I'll walk you through exactly what those mistakes are and how to fix every single one of them before you list. I'm Pam Béchard. This is the Local Market Signal. In this episode, let us protect your equity. Mistake number 1 is trusting the sold over asking sign instead of understanding what it actually represents in today's market. There are 3 reasons a home sells for over asking in 2026, and only one of them is good for a seller. The first is pent-up demand for a specific property, a unique home on a sought-after street, and buyers have been waiting for. When that home finally comes to market and the demand already there for it, it sells over asking because the buyers have lined up specifically for that home, not because the market is strong or is demanding over asking. The second is a deliberate underpricing strategy, which in 2021 to 2023, agents regularly use. They set an offer date and listed way below value to create competition. In 2026, this still happens occasionally, but the competition that results is far thinner than it was 3 years ago. The third and most common in today's market, what I call the last resort relist. A home that sat on the market, went through 1, 2, 3, possibly 4 reductions, and finally reached a price that the buyers were willing to pay. It sold over the reduced asking price, and of course the agent puts over asking on the sold sign. That is not a market signal. That is the cost of coming to the market overpriced in the first place. And here is what all 3 scenarios have in common in 2026. Good agents no longer set calling for offered dates because the competition simply is not there to justify it. Most over asking results today involve one buyer, a negotiated price, slightly over asking, and a full set of conditions, financing, inspection, and extended closing timeline options. That sign looks identical across all 3 scenarios. The market behind each one could not be more different. When you see that sign today, ask what was the original list price of that property and how many times did it change before the sale actually happened. TRREB data confirms exactly this pattern. In Aurora, the gap between property days on market and listing days on market hits plus 23 days. That means the average Aurora detached home that sold had already been through at least 1 prior listing attempt before it found a buyer. The sale to list ratio in Aurora detached sits around 98%, meaning sellers are accepting offers slightly below their asking price to get the deal done. If you're pricing your home based on seeing an over asking sign, you are not making an accurate pricing decision in this market, which leads us directly into mistake number 2. Mistake number 2 is misreading the current inventory levels and what it actually means for how buyers are behaving right now. Across York region, there are over 3,300 active listings. That is approaching 6 months of inventory, a true buyer's market. This is a massive shift from the tight conditions of 2021 to 2023. Buyers have choice. They are deliberate. They're including financing and inspection conditions as standard offer practices. If your home is not priced correctly and presented flawlessly, buyers will simply move to the next option. There is no scarcity driving urgency in this marketplace anymore. Presentation does not start with the photographer. It starts weeks, maybe months before that sign goes in the ground. In a market with 3,300 listings, a buyer who pulls up to the home and sees peeling paint, a cracked driveway, overgrown landscaping already forms a negative opinion before they walk through the front door. And a buyer who walks through and sees a dripping faucet, sticky doors, and scratches on the hardwood flooring already writing a negotiation letter in their head. The trades I refer sellers to before they list in this market are a lawn care company for exterior and a handyman for interior, which I have featured in issues of the local market signal newsletter. The links are in the description below. I understand the emotional pull to your real estate investment, but the market has moved significantly. Mistake number 3 is pricing for 2022 instead of 2026. In Aurora, the average sale price in March 2026 was approximately $1.19 million compared to $1.23 in February. The median sold price moved from $1.17 to $1.06 million in the same period. Now, here's what those numbers actually mean and what they do not mean. Don't worry, this is not a straight price decline. Month-over-month averages and medians reflect the composition of what sold, not the value of the individual homes. In March, a larger share of lower priced properties transacted compared to February. That buyer profile only brings down the median number. It doesn't change what the current market value price is. What the data does tell you is that the buyer pool entering the market right now is concentrated in lower price point. The luxury market, homes above the 1.5 million, is seeing a sales to new listing ratio of 17 to 28%. That is into a deep buyer's market, which means fewer buyers competing for higher priced homes puts real downward pressure that specific segment. The property days on market compared to the list days on market gap tells you where the pressure is coming from. Most Aurora detached homes cycling through the market right now are listing at aspirational prices. So they're sitting, then reducing, and eventually finding their clearer price after multiple attempts, and probably less than if they had priced it properly for the first time. It's based on the Toronto real estate market's data, the listing churn analysis estimated relist activity for the Aurora detached homes in the current market runs between 35 and 50% of all listings in the current 90-day window. These are derived estimates based on TRREB's property days on market, meaning how many days actually the property has been on the market since it started 3-4 relists ago. So face it, every week a listing sits, it loses negotiation position. It does not gain it in this market. The right price depends entirely on the type of property you own, and that leads to mistake number 4. Mistake number 4 I see costing move-up buyers the most in York Region right now, and it comes down to a mindset shift that changes everything. Let's look at a townhome owner or a semi-detached owner looking at the market and asking the wrong questions. They're asking, is now a good time to sell my home or my semi? That's not the right question, because you are not selling your townhome or semi-detached home in isolation. You are selling and buying simultaneously in the same market at the same time. The question is not what your townhouse sells for. The question is what your townhouse buys on the other side of the transaction right now. And right now the answer is more than it has in years. This is why. Because the detached homes are sitting for 20 days on the market. Yes, that detached home may say it's on the market for 28 days, but it's been actually on the market for 128 days. You're selling your townhouse in relative strength. There is demand and there are buyers in the market for that particular property. And then you are buying in relative softness. That combination has not existed in this corridor for years. Here's the mindset shift that matters most. Yes, you may sell your townhouse for less than you want or than you anticipate it's worth, but you're also buying your next home for far less. The market correction has happened on both sides. What matters is the gap between what you sell your townhouse for and what you buy your detached home for. And that gap right now is working in your favor. The detached home you want to buy has been sitting. The seller has been waiting. It's gone through a number of relists. Your offer can come with conditions, and you can negotiate. This did not exist over the last few years. The long and short is you need to run the math before you decide if the timing is right or wrong. In 2026, waiting for that perfect spring market may be the most expensive decision a seller makes. Number 5 is waiting for conditions that the data does not support and not understanding who you're actually waiting for. Aurora alone saw new listings surge by 36.5% from February to March, from 126 homes to 172. That surge is not random. That is a progression. Some of those sellers have been waiting for conditions since 2023 and have simply run out of patience. Others are facing mortgage renewals at a significant higher rate than they locked in 5 years ago. And the financial pressure of holding is no longer sustainable or desirable for them. And others are navigating life changes that simply cannot wait for a perfect market any longer. All of them are your competition if you wait, and they are already in the market or getting ready to be put in the market. Every week you delay, you're competing against more of them, not fewer. The window of opportunity is defined by the current data, not the calendar. Sellers who price accurately from day one and present the property well are closing successfully right now, and properties are moving. The ones waiting for last year's prices are repricing again and not selling. Simply, you cannot make these decisions based on headlines or future assumptions. You need to run your own numbers for your own specific property type in your specific neighborhood. I have built a free York Region South Simcoe move up math worksheet that walks you through exactly how to calculate your equity and your bridge costs are in today's market. The link to the download is free and it's in the description below. So do yourself a favor, run your numbers. If they make sense, my contact information is there as well. That's what the market signal does every week. Real numbers, verified data specific to this corridor. Subscribe so you never miss an update that will affect your move. Thank you again for watching, and I'll see you in the next video. Bye for now.